Hi friends, welcome to Grade B. We are back with yet another important lecture on the current affairs series that we are doing for you. So this is the current affair from 21st April 2022 to 30th April 2022. So let's quickly begin with the first piece of news. Creation of honorary designation at board level in the Urban Cooperative Bank. Right? So what is this news about? So this news is about an RBI guideline where RBI has come across during the supervisory review that many urban cooperative banks, what they are doing, they are creating an honorary position. Let's say a person is either CEO or managing director. Okay, so that person is getting promoted to chairman and a new CEO is appointed. So what happens here is that the corporate governance issue comes up, because the CEO or the managing director should be given a free hand to take the decision, right? But because of a honorary position chairman, he or she, the person who is sitting at that honorary position, will have a little bit of influence over the board, right? And that is what RBI doesn't want through this guidelines, and this is for urban cooperative banks. Okay, so what triggered RBI to take action? That many bank has adopted the practice of creating honorary designation at board level, such as chairman emeritus, chairman, group chairman, etc. Okay, now why was it necessary? Which I have already explained, is because of the influences. Then what is RBI's action? UCBs are directed not to create any honorary position titles at board level or confer such titles that are non-statutory in nature, to eliminate any such existing position title within 1 year from the date of this circular. Now, under which section? Under section 35A, section 36(1)(d) of the Banking Regulation Act 1949. This is where the RBI has drawn the power and has done it. Now, the next piece of news is legal entity identifier for borrowers. Right? Legal LEI stands extended to primary urban cooperative bank and non-banking financial companies. Okay, so this is applicable to whom? This is applicable to scheduled commercial bank, all in AIFI, small finance bank, local area bank, primary urban cooperative bank, non-banking financial companies, including housing financial companies. Right? So anything other than it, like for example payment bank, they are not eligible, or this is not for them. Then the guideline is that any non-individual borrowers enjoying aggregate exposure of 5 crore and above from banks and financial institution shall be required to obtain LEI codes as per the given timeline. So above 25 crore is April 30, 2023. Above 10 crore to 25 crore is April 30, 2024. Above 5 crore and up to 10 crore, it is April 30, 2025. So very important, right? Understand the keyword. This is for non-individual borrowers. What if it fails to obtain LEI? Then shall not be sanctioned any new exposure, or shall they be granted renewal enhancement of any existing exposure. Okay, so they will not be given they will not be any punishment. What they will do, they will not be able to enhance or renew the existing borrowing, means their borrowing capacity is going to come down if they fail to obtain LEI. Okay, so this is LEI. Now more about LEI. So LEI is 20 character alphanumeric character, okay, code. So as you all know, our every current affair material has the static part of it. So this is the static part. Now let's move to the next one. Continuation of modified interest subvention scheme. Right? So this is a guideline which you will find in both RBI and NABARD website for that particular week. Okay. Continuation of modified interest subvention scheme for short-term loans on interim basis during the year 2021 and 22-23. This is applicable to all public sector banks, private sector banks, and small finance bank. Applicable from 2021-22 and 22-23. Okay. So this is what you can see: benchmark rate, lending rate to the farmers, rate of interest subvention. Key highlight from the circular: interest subvention of 2% to cooperative banks on their net owned fund and up to 3 lakhs per farmer. Okay, wait, something is not right, let me correct it so that you will be able to see everything. Give me a moment. Very sorry for this adjustment. Okay, then 2% interest subvention will be continued till financial year 21-22. Most important thing, that 3% will be available to such farmers who are repaying on time. Additional interest subvention, right? So for example, if the interest rate is 7% and if a farmer is repaying on time, minus 3%, effective becomes 4%, right? So with this, let's move to the next news article. Let me check if everything is fine. Yeah. So the next one is compensation of key managerial position and senior management in NBFC. So RBI has come up to set up a committee. Okay, the name of the committee is Nomination and Remuneration Committee, NRC, right? And RBI has drawn power from where? Section 178 of Companies Act. Means, sorry, the power that NRC or the functioning of NRC would be as per the definition of Section 178 of the Companies Act, right? What RBI is telling to the NBFC, that any compensation that they will provide to their managerial personnel and senior management would be based on the recommendation of this committee, NRC. And this NRC people will, do everything as per the definition of Section 178 of the Companies Act 2013. This guideline will come into force from April 1, 2023, right? So let's move to the next scheme. That is remittance under various head, right? So money sent from abroad for travel grew threefold in Feb. So remittance means money flowing from the foreign country to India. Okay, so Indian spends about 3.23 billion for travel, sharply down from 6.93 billion in financial year 22, right? So RBI data showed overall remittance by the residents is 1.82 billion in Feb 22, up from 1.15 billion in Feb 2021. Okay, so after travel, the second largest spending was maintenance of close relative. So let us have a look at the various remittance. So this is travel at one number 2 is maintenance of close relatives, number 3 is studies, number 4 gift, then investment in equity or debt. Right, so this is for the Feb 2021 and 2022 data. Now let's move to the next one, credit card rules for NBFC. So in simple terms, right, this is applicable, I'm telling you the few keywords, that this is applicable from 1st of July 2022. Important point, the other, RBI wants that if NBFC wants to issue a credit card, then they should take prior approval from Reserve Bank of India. Given the prerequisite is that minimum net owned fund should be 100 crore. Only they can issue. Again, they can issue only after the approval of RBI. Okay. So now let's move to the next piece of news, that is SEBI streamlines payment process. Okay, UPI for IPO allotment. So for IPO initially there was ASBA. Okay, initially there was only ASBA, but as of now you can apply from UPI as well. Okay, so what you do, you go to your trading account, you open you apply for an open IPO, then pay via UPI mandate. You provide your UPI number in the trading platform, then a approval process comes in the particular UPI app. So from wherever, for example, you have given the PhonePe UPI ID, then it will come in PhonePe. You have given Paytm UPI ID, it will come in Paytm. You have given Paytm UPI ID, then it will come in Paytm. So this is an UPI mandate. So SEBI has streamlined that, right? Rest, when you go through it, you will understand. Now let's move to the next one. IMF commentary on India through World Economic Outlook, that 3.6% in 2022 and 2023, India's growth projection. Then in 2021, India growth rate was 8.9%. For 22-23, it is estimated to grow by 6.9%. Then it is the fastest growing major economy in the world, almost twice faster than China's 4.4%. Then India's general government fiscal deficit projected at 9.9% of GDP for financial year 23. Right? So let's move to the next one. Very important, currency and finance report. Very important, right? This is a report released by whom? Reserve Bank of India. Okay, this is an annual document. What is the theme? The theme is revive and reconstruct. So as per the report, there are 7 wheels of economy. What are those? Aggregate demand, aggregate supply, institution and intermediates and markets. Number 4, macroeconomic stability and policy coordination. Number 4, this is number 5, productivity and technological progress. Number 6, structural change. Number 7, sustainability. Right? These are the 7 wheels of economy. Okay, let's now move to the next one. What this report says. This report says about COVID-19 that it is only by 2030, 34, 35, means 12 years from now, India is expected to make good the losses arising from the pandemic. Means whatever we could have, compounded if there were no pandemic. So we will take, the recovery will take at least 12 years. By 2034, 35, the losses that we have made will be recovered. So it's a long time. Then growth, taking the actual growth rate of minus 6.6% for the period of 2020 and 8.9% for 21-22, and assuming growth rate of 7.2% of 22-23, 7.5% beyond that, India is expected to overcome COVID losses in 23-24. Right? So this is the analogy of why this 12%, why this 12 years. Then output loss to GDP. The output loss for individual has been worked out to be rupees 19.1 lakh crore, 17.1 lakh crore and 16.4 lakh crore for FY 21, 22, 23 respectively. Okay, then there are a few other key recommendations. That is, India worked out to be 6.5 to 6.85%, consistent with blueprint of reforms. Then there was a balancing between monetary and fiscal policy. Then price stability is necessary for what? For sustainable growth. This is what the recommendation is. Then reducing general debt to below 66% of GDP over the next 5 years is the important to secure India's medium term growth prospect. Then it also tells about the Industrial Revolution 4.0. Okay, then also it tells about the FTA negotiations, should be balanced, means there should not be any advantage to the other country. This is what the recommendation from the report. Then the next piece of news that we have come is NABARD study group 2022. So this is a joint study by NABARD plus Bharat Krishak Samaj. Bharat Krishak Samaj, very important keyword. Right? Now, what the study says, right? Let us read about the survey details. That 3835 farmers across 126 villages in the 3 states was conducted between January and August 22. Okay, so 94% responded were from the small and marginal cultivators. So area of study is that farm loan waiver in Punjab, in Uttar Pradesh and in Maharashtra. This is the area of study. So major highlight from the Punjab is more than 60% of the very high and high distress small and marginal farmers did not receive farm loan waiver benefits. Then the exclusion rate was also 60% of the medium distress category. Then major highlight Maharashtra. Small and marginal farmers that were relatively better off as they were categorized as low distress received the maximum benefits. Close to 42% of the small and marginal farmers whose distress category was very high did not receive FLW benefit. Then major highlights: Uttar Pradesh. 47% of the very high distress category and 45% of the high distress category small and marginal farmers did not receive FLW benefits, right? So see, reading all the points, these are the data, right? There is nothing much to explain, just go through it. This is very important, right? Now again, the survey also tells about the electoral implication, that only 4 out of the 21 political parties lost the election when they have said about the farm loan waiver. So this means a loan waiver electorally benefit political parties, right? Now you see so these are the few schemes of different government. Karz Maafi Yojana by the Punjab, Chhatrapati Shivaji Maharaj Kshetriya Samman Yojana by Maharashtra, Kisan Rin Mochan Yojana by UP. Year of launch, beneficiary, estimated cost to extinguisher, everything is there. Let's move to the next one. So in the way forward, what NABARD has told that in future NABARD is planning to come with a distress index by the NABARD. Okay, so in distress index, multiple things would be covered. There would be recommendation, there would be multiple things. There would be climate related data, there would be MSP related data. So you can go through it from these two comments, right, which in the report it was made. Then SIPRI report, okay, full form of SIPRI is Stockholm International Peace Research Institute. As per that, India is the third highest military spender in the world at 76.6 billion. How much? 76.6 billion, right? So if you see world expenditure, US at number 1, China number 2, India at number 3, UK and Russia were the top military spenders. Okay, now if you see India, you will find the data here. Okay, then top 5 countries are US, China, India, United Kingdom and Russia, which accounted for 62% of the world military spendings. The US and China alone accounted for 52%, it mentioned. So you see the amount of money that US and China puts. More than half only 2 countries, and rest of the world is 48%. So then let's come to the Asia. So Asia, according to the report, military spending in Asia and the Oceanic totaled 568 billion in 2021. So in Asia, it's India and China is the major spender. So let's move to the next one. International Religious Freedom Report 2022. So this was released by a department of United States Commission on International Religious Freedom. Okay, so the agenda here was, the agenda for India was, they have recommended government of USA to declare India country of particular concern, but they have given another one also, that is special watch list, but there is no comment for India on this special watch list. So country of particular concern, what said? Recommended 15 name to be designated as CPC. India, Afghanistan, Nigeria, Syria, Vietnam, for adding them in CPC, means these are the new addition. So this third one, redesignation, means Myanmar, China and all these countries, these are already in CPC, country of particular concern, but India is still not. India is recommended. So in a special watch list you can go through it, but there is no mention of India, so let's not discuss it. So this is a recommendation. This is not binding on the government of US. Then impact of India is nothing, because this is just to amalgamate the image of India, and even there is no such comment from the government of USA, except that the Secretary of State has spoken about it while there were 2+2 ministerial dialogue in the US on that particular week. Except that, there is nothing, no more comments. Now these are the comments, or these are the reason for which it wanted India to be under the CPC, which you should go through it at least once. That would be enough. Now, what is USCIRF? When you read this, you will understand. Now, let's move to the next one. That is Global Assessment Report 2022. This was released by whom? United Nations on March 26, 2022. Highlight of the report: the world will face around 560 disasters every year by 2030. Why? Because of climate change. That's it. Nothing. Because of what? Climate change. Okay. The suggestion: this report should be a wake-up call to the country who need to accelerate action across the framework 4 priorities to stop the spiral of increasing disaster. Now, what are the 4 changes? Poverty burden will increase. Developing nation most vulnerable, not insured. Then building back better. So there are 3 points, and under the 3 points you will find all the things are summed up. So when you go through it at least one time, you will have very good fodder material. So again, this is more sort of a material for descriptive part rather than the it for MCQ. So you will have a very good fodder material. Then very important piece of news, that is ONDC trial. Okay, so ONDC trial begins April 29 in 5 cities. Which cities? These cities will be Delhi, Bangalore, Coimbatore, Bhopal and Shillong. Thereafter, it will be scaled up and launched in 100 cities over 6 months. Then objective of the pilot trial. So the objective is simple, right? So this will, why we do pilot, right? Because government wants to see the benefits and any challenges that is coming across before it rolls out the thing for the entire country. So let's move to the next one. How many retailers? There will be 150 retailers that would be participating, and 5 seller platform would be participating. Then what are the role of other apps? Paytm. Okay, a buyer side app is the Paytm, and for delivery and logistic it would be load share. Okay, then let's not get into the background, and here you will find everything that you want to know about ONDC. Again, in every, so ONDC was also discussed in the last month. So I would recommend you open that particular material, current affair material, compare what we have given there, static part, and what we have given here. Both are different, right? We have given the basics of ONDC on that particular current affair material, but here we have given little bit more to it. So basically, understand your logic. It's not possible to give all the static information in the current affair material, then it will look static more, current affair less. So what we try to do from our side is that we keep the information balanced from material to material. That's why we come up material in every 10 days. Okay, so that you have a very good. So again, if you are new who is starting with this current affair material, I would tell you, please go back and read the other as well, because all these current affairs are connected. So this is strictly for those who are preparing for this year. For someone who is preparing for next year, obviously when you start with this, fine, not a big deal. Now, then there is a data which says that youth not looking for job. So this data is from the Center of Monitoring Indian Economy. This says that majority of Indian, around 900 million workforce, stopped looking for job. Means they are not searching the job. Okay. In March 22, India's labor force participation rate, that is LPR, fell to 39.5% from 39.9% in February. So this shows that there are multiple people who are leaving the job but they are not taking up the job. What could be the possible reason? Obviously, startup is a culture. Everyone wants to take risk. Again, on the other hand, there are few other things. Why did the country report a lost LPR in March 22 when there was no COVID-19 wave or stringent restriction on mobility reported? Okay. Billions of Indians, especially women, are dropping out of the labor force, tired and disappointed with their failure to find a job because there is no job available based on their skill set. Right? First thing. Second thing, 900 million Indians of the legal working age, roughly the population of US and Russia combined, do not want job according to CMIE. Okay, now why do they not want? So there are multiple reasons, right? There are higher studies, there are women's, right, who are moving from job life to housewife, or maybe they are, you know, they are planning a family, or there are multiple things that is coming up. So the low LPR for a moment can give an illusion of unemployment rate falling, as it did in March 22, when it recorded 7.6%, a fall from 8.1% in Feb 2021. So a low LPR also means that when there are no people who are finding or looking for a job, this means that they do not need. So they are not considered unemployed. So this will give an illusion that unemployment rates are falling, which is not the case. Okay. Now, what could be the possible reason for it? Now, what stands out is the time is the labor force, both its constituents shrunk during a large period of October-March 22. This is for the first time in 3 years, that is quarter June 2018, that CMI have sent such a decline in the labor force. Then, what are the challenges? India being on the young worker to drive growth in one of the world's fastest economy. See, in simple terms, the challenges is India is one of the youth country which want to harness the capabilities of this youth population. But what if this youth population do not want to join the workforce? Then in that case, India would not be able to reap the benefit of that young population. That is the big challenge. Okay. Now, let's move to the next one, that is FSSAI health rating system versus warning debate. So this is for some, there's something for you to read it out. Let me tell you the entire story. So health rating system, what FSSAI wants to do is that, let's say you buy a Lay's packet. Okay, based on the type of food, FSSAI wants to put, star, whether it's healthy or whether it's not healthy. Now what you have, you have a green symbol and red symbol. Green shows it's it's vegetarian, the red shows that it's non-vegetarian, right? Again, now FSSAI wants to rate it based on the food type. So, and this is not, one day initiative of FSSAI. So FSSAI has been doing it since 2013, thinking of doing it. So there are multiple, challenges that came in between. Challenges like, for example, there are fruit-based products which are good source of nutrients, whereas they have sugar content in it. So means they are beneficial for one hand, they are not beneficial for the other hand. So in that case, the challenge is how to rate them. So recent development is that IIM Ahmedabad has conducted a survey which said that half a star to 5 star, there should be rating from half a star to 5 stars, right? But the challenge as of now is that there is a debate from the industrial expert which says that health rating system, is like giving an advantage to certain product. For example, you are holding a packet of chips, let's say, and you are holding a packet of something else, and when you see the rating, is 2 for the chips and rating is 3 for that other product, obviously you will tend to buy that. So this in the other sense is also promoting that product. So challenge number 1. Challenge number 2 is from the international data, which says that New Zealand, Australia, they have already adopted this, but there is no such meaningful behavioral change in 8 years after implementation, right? So what industrial people want is that a warning symbol, right? A warning symbol. For example, when you buy something related to tobacco, you have a warning symbol. So in the same case, FSSAI, they are telling FSSAI that you should be coming out with the warning symbol rather than health rating system. So that is still, in the implementation process. And why I told you the entire story, and it is there in the current affair material, you never know, you can get a descriptive question, because this is related to health, and health is one of the major sector that anyone from the past 2 years is considering at the topmost priority, be it government or be it individual, right? So please do read it at least 2 times, you are good to go. Then consumer expenditure survey set to resume after a break. So this was a survey conducted by NSO every 5 years, right? But in 17-18, the data did not, means the survey was done, but the government, means the survey was done for the period of 17-18, for which the data has to come out on 2019, but it did not come. It was stopped citing data quality issue, right? Now the survey, after that, since that in the last 2 years it could not be done because of pandemic. Now multiple things has been improved. That survey is again going to start. Okay, the survey is again going to start. So that is what this news about. The rest you are going to read. Now with this, we have come to the one-liner, which that we do not discuss one-liner, but yes, these are also important. So with this, we have come to the end of this lecture. We wish you very good luck from Team Grade B. Happy and thank you learning.